Hi everyone. So recently, Union Finance Minister Nirmala Sitharaman has proposed major changes in personal income tax in the Union budget for the year 2023 and 2024. And she also said that the proposals regarding personal income tax will primarily benefit the country's hardworking middle class. Now we know that many people are trying to understand what are these changes and how do they impact their personal income. So through this video, we will try and answer as many as questions as we can. And today we have Mr. Tejas Karnani with us. He's a chartered accountant, and today he will be covering the changes introduced in the budget under the new tax regime, the difference between the new tax and old tax regime, and also key takeaways for the common public and pointers to keep in mind while filing their returns. Welcome, Tejas.
Hi, Avani.
Yeah. So starting with my first question, can you explain to our audience the changes introduced in the budget under this new tax regime?
Sure. First of all, we would like to understand the history of this new tax regime. Okay, it was a section 115 BAC. It was introduced by the Finance Act 2020, and earlier the government introduced it as an optional scheme. Earlier it was an optional scheme. Now the government has considered to post this scheme under the first scenario, and now this scheme will be the default scheme for all the individual taxpayers. Now let's suppose I will give you an example. Let's suppose if you want to opt for the old scheme. Okay, we will understand what is old scheme and new scheme later, but let's suppose take an example. Let's suppose you want to opt for the old scheme this year. So in that case, you need to file a form for opting for this old scheme. That new scheme will automatically populated on your income tax portal, and it would be a default scheme. So the crux of this point is that the government is looking to increase the use of this new tax regime, and government is pushing that the people can use this new tax regime because it is much simplified portion of the tax. That's it. And now coming to the second point, that what are the changes under the new tax scheme. The first of all, the changes are under the slab rates which were earlier under the new tax regime. Now as you can see in the screen also, that up to 3 lakh there will be no tax. From 3 lakh to 6 lakh it is 5%. From 6 lakh to 9 lakh it is 10%. From 9 lakh to 12 lakh it is 15%. From 12 lakh to 15 lakh it is 20%, and above 50 lakh it is 30%. So, and it is worth to mention here that the government has also increased the rebate under 87A for the people who has income less than 7 lakh under the new regime. Let's suppose if anyone has an income of 6 lakh or 6 lakh 50,000, then he need not to pay any tax if he is opting for the new regime. However, if he is opting for the old scheme, then and let's suppose he does not have any deductions or he's not claiming any exemptions, then he need to pay the tax, because under the old regime you need to pay the tax if your total income is more than 5 lakh after claiming all the deduction exemptions. However, under the new regime, you don't need to pay any tax up to 7 lakh, barring it does not allow this deduction and exemption. So, in case your income is 6 lakh 50,000, you don't need to pay any tax and you need not to claim any deduction or exemption, so that your income tax will be zero. So coming to the second point, which is the second change, which is most likely relevant for only the salary class person. Under the salary head of income, we got a standard deduction of 50,000. Earlier, this 50,000 was only allowed for the old tax regime person. New tax regime person, under for the new regime person, it was not allowed. Now the government has proposed that it will be allowed for the new tax regime person also. Let's suppose in case you have an income of salary of 6 lakh 50,000, or let's suppose you have an income of let's suppose you have a salary of 7 lakh 40,000. So under the new regime, your total income would be 7 lakh 40,000 minus 50,000, that is 6 lakh 90,000, and you need not to pay any tax on this six on your salary. However, in case you have an income of more than 7 lakh or more than 8 lakh, then it will be calculated according to the slab rate. in case of new regime. Now coming to the third point, where the this new regime earlier was introduced only for the individual taxpayers. Now, since the government is pushing everyone so that they can use the new regime, so government has allowed this new regime for the artificial judicial persons, AOPs, Association of Persons, BOI, that is body of individuals. Fourth change under the new tax regime is generally under section 1010 AA, we get a leave encashment benefit deduction if conditions prescribed under the section are satisfied. Earlier, the limit of this leave encashment is 3 lakh. Now, the limit has been significantly increased to 25 lakh. So, if you are getting the leave encashment in any of your year, basically, or you are encashing your leave encashment leave, so you can get a exemption of rupees 25 lakh flat. You let's suppose if you are getting the leave encashment of 10 lakh from the company, so that will be complete tax free under the new tax regime. However, under the old tax regime, the limit is same as 3 lakh, which has not been changed. Now the last change under the new tax regime, which is mostly relevant for the income groups which are high income groups people, and it will be applicable for the people who has an income of more than 5 crore. For the people more than 5 crore, government devised the surcharge at the rate of 37%. Earlier it was 37%. Now under the new tax regime, it will be 25%. So effective tax rate above for the person having income more than 5 lakh would be 39%. Earlier it was 42.79%. So that's are the all changes under the new tax regime.
Okay, so thank you so much for taking us through all the changes under the new tax regime. But can you explain to the audience what is the difference between this new regime and the old tax regime, and how is it like, which is more beneficial?
The basic difference between the two schemes are the slab rates and the allowability of deductions and exemptions. So let's start with the slab rates. As shown in the screen, in the new scheme, you don't need to pay the tax up to 3 lakh. So up to 3 lakh there is zero tax, and 3 lakh to 6 lakh it is 5%, 6 lakhs to 9 lakh it is 10%, 9 lakh to 12 lakh it is 15%, 12 lakh to 15 lakh it is 20%, and above 15 lakh it is 30%. However, as you can see in the screen also, under the old regime the slab rates are the same as they were earlier. Up to 2 lakh 50,000 no tax, 2 lakh 50,000 to 5 lakh it is 5%, 5 lakh to 10 lakh it is 20%, and above 10 lakh it is 30%. So this is all about the slab rates under the both the scheme. Now coming to the second difference between the old scheme and the new scheme is that, as discussed under, during my first question also, what is the highest rate of surcharge? The highest rate of surcharge under the new scheme would be 25% for the person having the income more than 5 lakh. However, under the new scheme it is same as 37%. So for the person who has an income of more than 5 crore, and the effective tax rate for the person under the old scheme is 42.79%. However, in the new scheme it is 39%. So this is the second difference between the old scheme and the new scheme. And the third and the most critical point of the difference between the old scheme and the new scheme is allowability of the deductions and assumptions. Under the old scheme, we have lot of deductions and assumptions which we can claim. Let's suppose I can give you the example of the major assumption and deduction which we claim under the new old scheme is, first of all, for the salary class it is much popular is house rent allowance, HRA, which is allowed on the basis of the HRA you receive and the rent you paid, and basis on your salary. So under the income tax under the new regime, the HRA is not allowed. Second most important is Section 80C deductions. Let's say example, deposit in the PF amount and the LIC and this tuition fees and the payment of interest on payment of principal amount of the home loan, so this will also be not allowed. Third is people generally take health insurance and medical insurance for themselves, their parents, and their senior citizen parents. For their, if any person is handicapped, they also take the medical claim for them also. So all these would not be allowed under the new tax regime. And thirdly, that interest on home loan is generally allowed under section 24. This is basically allowed under the old regime. Under the new regime it will not be allowed. Under the old scheme, we got the exemption for the deduction for the interest on education loan, but under the new regime it will not be allowed. Under the old scheme we get the leave travel allowance. Leave travel allowance is basically what we get in the block of 4 years, two times in a block of 4 years. However, under the new regime, it will not be allowed. So one need to check about this deduction and allowability of these deductions and exemptions before claiming before going for the choosing of the scheme, basically before choosing the scheme, basically.
Okay, so thank you so much for sharing that, and explaining the difference through deductions and exemptions and what is allotted in the new tax regime and what is not. Coming to my third question, what would be the key takeaways for the common public and the pointers to keep in mind now when they are filing their returns? And also, some of them are having doubts regarding the documents needed to be submitted by salaried people to their finance team or HR department. So maybe you can highlight on that too.
So under the new regime, if any person is opting for a low tax rate, then he or she can opt for the new tax regime. However, one need to also understand, let's suppose if I have taken an LIC or any policy of rupees 1 lakh per year, and it is a recurring amount which I need to pay every year. And I have taken it to let's suppose 2 year or 3 year back. So I need to pay in the future year as well. So while taking the new regime, the same will not be allowed. However, under the old scheme, it will be allowed. So while taking the sorry. So while deciding about the regime, you need to calculate the tax according to your slab rate and according to your deductibility, according to your assumption and deduction which you want to avail. Okay, let's suppose if I have exemption and deductions and I have a tax saving, so it would be preferable if I will go for the old regime. However, it need to be calculated on case to case basis. And one more thing, let's suppose if any person has a is a salary class person, only he has a salary income and he does not have a basically profit and loss income. He does not have any business or profession income, so he can switch over and switch in to the new scheme and old scheme every year. So government has allowed for only for the person who does not have any business or a profession income, he or she can switch in and switch out of the scheme every year. So let's suppose in the first year, or in basically let's suppose in 2024 I have some deductions and exemption, so I will basically opt for old scheme. However, in the 2025, I do not have any assumptions or deduction. Then I can go for the new regime. So basically, before choosing the scheme, you need to calculate the tax according to both the scheme and which is beneficial to you. You can basically opt for that scheme only. And now coming to your second question, that what would be the documents you need to submit to the your chartered accountants or your company HR. So under the new regime, since any deduction and assumptions are not allowed, so you need not to worry about these documents and all. However, under the old regime, let's say if I am taking the HRA, which is most important about this among the salary class person. So for the salary class person, HRA, you need to maintain the rent agreement, copy of rent received, and the most important document is the PAN number of your landlord, which is which is required if the rent is more than 1 lakh during the year. So if your rent is more than more than 1 lakh, then you need to mandatory submit the PAN number of the landlord. And for the other tax saving investments, you just need to maintain the documents of your premium. And if you have a home loan, then the schedule required to be maintained and interest certificate from the bank will also work. You just need to maintain these types of documents with you, and at the time of the filing of the return you need to submit it with your chartered accountant, and while while working in a company you need to give it to submit with the HR of the company.
So I hope everyone has noted down the documents while you were talking about it. And also, I hope everyone takes into consideration your recommendations of, understanding whether to file in the new tax regime or whether to opt for the old one. So thank you so much again for covering all of this for us. I think this will cover a lot of doubts of our audience and help them understand it in a better way. So thank you so much for sharing it with us.